Hi, this is Dean Odell with 7 Gables Real Estate and the Odell Group. Today is June 2nd. It's time for another Tustin Talks. We have a changing market and some exciting new numbers to go over. Let's get to the first chart. So looking at the active listing inventory chart, we are on the way up, and that's where we need to go. Right now, we are at 2,697 homes. Our 3-year average prior to us all running around with masks on our face was 6,370 homes. So that means we are still down 3,673 homes. So all this hype you're hearing about the market imploding, all this inventory is just going crazy, it's coming on the market. You guys, just turn in Tustin Talks, just turn here. I'm gonna tell you guys when things are going bad. Things aren't going bad right now. We're finally getting inventory. We're moving back towards a normal market, and thank goodness for that. It's just been crazy. If we stay at this same pace, our inventory is gonna peak out right around October, November, when the market starts to usually start shedding its inventory for the holidays. If we do that, we will be at about 4,500 homes, which again is getting closer to the norm for that time of year. So just know right now, the sky is not falling, okay? Tell Chicken Little and all these other people that are telling you this, just to hang on here. It's not in the cards, all right? Okay, now looking at demand year over year, we are at 2,113 homes. 2 weeks ago, we were at 2,179 homes. And if you look at where we were last year, we were over 3,000, like 3,030. So yes, our demand is way down. Now, can I say that our demand is down because of inventory? Probably not, because we know inventory is going up. So what is causing demand to go down? Well, we're gonna talk more about it, but it's affordability, okay? Our demand peaked right in late March, was right about when all the interest rates started going up, okay? We have fallen about 8% in demand since March. And normally this is about where we're peaking, and we are down 3% from last year. Now here's another sign that the market's changing, our expected marketing time. Look at that chart above. It tells you what is a buyer's market, what is a seller's market, and the whole range by days on the market. If we look at where we are now, we are at 38 days. 2 weeks ago, we were at 34. We started this year at 20. So now, market's slowing down, it's deaccelerating. We're not going 200 miles an hour, we're just going 120. It's still a fast market. 38 days, look at the chart. Still a hot seller's market, not just on fire like it was last year at 22 days. Okay, here's where we break down expected marketing time by price range. Look at last year's numbers, look at this year's numbers. Compare them. You will see we are going up in days, okay? So we know this market is slowing down, but we also know we're nowhere near normal, okay? It's slowing down. It could not move at the speed it was moving forever, you guys. It's just normalizing. It is not imploding. No sign of that yet. Now, let's talk about why it's slowing down. Okay, let's look at the interest rates impact on affordability. Now, if someone wants a $4,000 a month payment, let's just talk about some of the, sounds crazy to say, but first-time buyers in Orange County that have to pay almost $1 million for their first house, right? So if you look at when interest rates were 3.25%, which was just at the beginning of the year, somebody could buy with 10% down, they could get a house for just about $1 million, $1,021,000. Now slide all the way to the right to where rates are right now, and they're down to $782,000. Yes, there's different programs they can do. They can do 10-year fixed, they can do adjustables. This is just a 30-30 comparison. So if you get those conservative buyers that aren't comfortable with anything but a 30-year mortgage with 30-year term, this is what's happened, okay? They've lost almost 20 to 25% purchasing power, which is another thing we've been talking about. Every time rates go up by 1%, the buyers are losing about 10% purchasing power. Now, on top of that, let's not forget that prices have been going up as well. So what does this mean for Orange County affordability over time? Let's look at the next chart. Let's look at this chart on Orange County affordability over time. Look at it, goes from 1980 to 2022. And when we are in red territory, that means we are in a territory that is just not affordable to the masses, okay? Look at where we were in 1980, 1990. Payment as a percentage of income, all the way to the right. 1980, 55%. 1990, 50%. Okay, that's too high. People can't be giving half of their incomes or more to their house payment. It just doesn't work, right? Then we got to 2000. Okay, rates were still at 8%, but prices were low, and people could make a payment that was 40% of their income. If you go to 2006, when things were high, you could see the number jumped to 59%. If you go to 2012, we're at 33%. Just keep going down the chart. Now you can see how it's moved up all the way to today because of this giant jump. From the end of 2021, we've moved from 44% to 66%. That is not sustainable. It cannot continue, okay? So what does this mean? It means that we're going to have less buyers on each deal, less people that can afford each house. Does it mean prices are going to tumble and fall? Maybe. Are they going to fall by that much? Hard to say. What if interest rates go back down? If we have a recession, interest rates may go back down. All kinds of different factors at play here. So let's go to my advice here at the end. Okay, so now let's talk about what's going on in the real world in Orange County of real estate, not in the newspapers, not on YouTube with all these hypesters, all this kind of stuff. Here's the reality. There's not enough people that can afford homes. There's almost half as many people that could afford the median priced home as there was when this market was really, really churning, okay? So, of course there's gonna be less buyers in the market. Now we're getting more inventory. All this is moving us more towards a normal market. Are prices gonna go down? I don't know. They probably should, but is it, you know, I'll tell you what, my buddy gave me the best line, and I'm gonna pass it on to you guys, okay? Remember when the stock market was just kind of imploding a few weeks ago? Well, my buddy, he manages $2 billion in portfolio money. So you can imagine that got a little bit of pressure there when the market's going down, right? So I called him up, said, hey, you know what do you think? Is things still going down more, or is it time to buy? Because it seemed like it's probably a pretty good time for me to buy. And you know what he said to me, which this just totally applies to real estate as well. He says, hey, Odell, he says, have you ever been to the Market Timers Hall of Fame? It's Market Timers Hall of Fame, I haven't even heard of it. What's that? He goes, it doesn't exist. Stop trying to time the market. If you see something that makes sense to buy, you buy it. If the fundamentals are right, if it makes sense for you, you buy it, you hold it long term. That's what stocks are about. Well, guess what? That's what real estate's all about. So all these people that are trying to hold off and time the market, this and that, you know what? We may have a correction. This is not the Great Recession. I don't see prices going down 30% or, you know, whatever people want it to go down, right? We still have demand in Orange County. We are not living out in the plains of Kansas, you guys. This is an area that's in demand. People want to live here. So we can have all kinds of conversations as to why that is and why it isn't. But the reality is Orange County is in demand. It's a great place to live, and we're all lucky to be here. So here's what you need to do. If you see a house that makes sense, good news is you have less competition. We're seeing this on our own listings. We're only getting maybe 2 or 3 offers now on houses right away if they're priced right. We used to get 10, but there's still buyers out there that want to buy. People need a home. They want a home. They don't want to just rent forever. So again, do what makes sense for you. Don't worry about the market, but make sure right now, if you're buying for the long term. There's going to be no short-term flipping anymore, okay? Those days are over, all right? So sellers, you know what? The best is behind you in terms of buyers' attitudes. The buyers know now that the market is not going to just continue to go up, and they're going to create all kinds of equity for themselves. So the reality is, let's get your house ready. Let's get it priced right. Let's get it sold, okay? Because now is the time to do it. So we will talk to you on the next Tustin Talks, and can't wait to update you on what's next. See you then. Bye-bye.